Hey guys, it's time again for another mortgage report. My name is Mike Munzing with Munzing Mortgage Group down here in San Clemente. This week we're going to do something a little bit different. I got a report this week over from my old friend Mark Hansen. I used to quote him quite a bit. Mark is also known as Mr. Mortgage. He's really deep in the weeds of the analysis of the mortgage industry, how it relates, how the government relates to the mortgage industry, and he's got some amazing insights. He's been a little quiet lately, but he really came out with a big one this week, and let's cover that and see what it shows. Okay, Mark broke his report down into 7 sections. Now I am putting this on my website at www.mikemunzing.com. I'll post it there. I'll probably be sending you an email as well. I will link it to the email as well. But the title of the report is basically, it says, banks not wanting to lend is a myth, and preventing foreclosures is hurting our housing market. That is oh so true. Basically, the way he covers it is it's a trendy myth currently, as he puts it here, that banks are not wanting to lend. And he also says that the lowering rates, there's a few things that are going on. The lowering rates and the mass refi efforts of the federal government, obviously Obama came out this week with another big plan to do that, as well as pulling the foreclosures off the market, is really holding off our recovery. And we've seen that since the heyday ending in 2007. We haven't really recovered from that. It's because of a lot of the intervention. I've been saying it over and over, and it is oh so true. So what Mark covers is 7 of the headline misperceptions that are out there, the recent proposed intrusions by the federal government, and basically his pet peeves of what he sees as the major problem. First is, once again, that the liquidity is not there from the mortgage industry, that the lending world does not want to make the loans. What he says here is very, very true, if we've been working together, that much like the early days when I got in the late 80s into the 90s, if somebody had a job, if they had good credit, if they had solid income and money in the bank, they could absolutely get a loan. That is what's going on today. I'll tell you, if you bring me somebody who's got a decent job, who's got good credit and is, has money in the bank, absolutely, I can get him a loan all day long. So the idea that that is not true is absolutely wrong. And he goes on to item number 2, that 95% of the loans that are out there right now are from the GSEs, the government-sponsored entities, Fannie Mae, Freddie Mac, and that rolls over as well to FHA and VA. So when 95% of the loans that are out there are from the GSEs, it's not the bank's decision really even to make these loans. Basically, I bring them the information, we plug it into their system. If the numbers come out right, if it approves it automatically or automated, they'll do the loan. That's not a problem. So once again, if you've got all the pieces of the puzzle, that'll work. One of the primary differences between the bubble years, as he calls it, and today is that now the borrowers actually have to prove what they're stating on their loan application. The third point that he makes is less to do with you as the realtors, but more me as a lender, is that the number of refinances have dropped quite a bit. Now, the misperception is that it's due to the supply. In reality, it's due to the demand. There are a lot less borrowers out there looking for refinances, even though the rates are low. And part of the reason is that the rates dipped very low a number of months ago. A lot of folks went through and got the refinances done then, so it doesn't make financial sense to do the refis again. But a secondary reason, once again, is without being able to lie about your income and your assets and the value of your home, like it was in 2003 to 2007, everything now pretty much has to be verified. So that holds off a lot of loans, and up until now, we'll see what's coming down the pipe here with this new Obama plan, but we have to get that appraisal value as well. So that's another aspect that is more for the refinances, more a matter of demand than supply. Okay, item number 4 he mentions, and has been his big pet peeve for a long time, is the prevention of foreclosures. He says another cry getting much louder as we go into the election season is the prevention of foreclosures, thinking that's going to help things. It doesn't help things. It makes it very difficult. What a lot of the realtors don't understand is that the short sales and the foreclosures / REOs, that is our market. In a lot of the markets here, California and some of the other states, it's upwards of 50% of the sales are actually distressed foreclosure REO sales, and that is what makes up the market for our buyers. He talks about effective negative equity of our potential repeat buyers. I've mentioned this before. This is where the buyer is potentially upside down. Now, the problem is he and I don't count upside down as 100% of the loan amount versus the value. The only way to recover our market is to get more buyers. This is a demand-driven, buyer-driven problem with our home values. So unless we get new buyers, we can't solve the problem of the value of the homes. So repeat buyers are the issue. Now, the only way to make a viable new buyer is if somebody who owns a home has the ability to sell that home, pay you your commission and the closing costs, and still have enough to go into the next purchase and have something to put down, either 10 or 20% for the next home purchase. That's how we provide a move-up buyer. And that's where the effective negative equity really comes into play. If you're maybe less than 80 or more than 80% loan to value, you can't even be effective in doing that. Now, what happens is if you take 80% as the number, 50% of the existing homes in America with mortgages are effectively underwater. Now, a final note on this area, he says with rates at historic lows, the first-time home buyers and the investors are the primary buyers that we currently have. And anything done to prevent availability of properties for the first-time home buyers and for the foreclosure investor buyers will very much hamper the sale of our homes, and it further prevents the ultimate clearing out of our market. That's the problem. We need to clear a lot of the shadow inventory, and we need to clear out a lot of the market that's been held up in the REOs and the foreclosures and those who are underwater. It is forcing first-time home buyers into new home communities when you can't have the products. I've talked to a lot of folks who are buying new homes again, and that only adds to the supply. It adds to the problem. The sixth item I'll just touch on briefly. He says if borrowers don't have good income, credit, or equity, they can just do a loan modification instead of a refinance. Well, that in effect is what's happened. If they stop making their payments from 2007 on through 2009 through 2010, is that a lot of these folks just did these crazy loan modifications, whether they were dropping their principal, which I think is horrible, or they're getting them in at 2% interest rates. That in effect was the crazy loans that were being done back in the bubble years. It's just now they did them in the name of loan modifications. So this has definitely been a negative effect on our market. And once again, it drags things further and further out from our recovery. And finally, on number 7, he wants to kind of cover again that it's important to remember that every time a movement or a new government artificial stimulus program comes into play and it gains a little momentum in the media and with lenders and with banks and with the National Association of Realtors, it is only doing one thing. It is preventing a disaster that is imminent, that they're saying is coming right now. We've got to do this right now. You'll hear Obama saying this all the time. You have to do this right now to prevent this. No, these are little temporary fixes. This problem is obviously huge. And as Mark points out, the only way to fix this is time. And the more we intervene, the more we throw these programs in and get in the way of the market solving the problem, the more this is going to last. We would have been well further down the road to getting rid of a lot of this inventory and stabilizing our market if they had not thrown one intervention, one stimulus after another, which A, gives false hope to home buyers, and B, makes others wait and stall and try a different route or don't make a move, or they're waiting to be given a handout. They're waiting for some sort of a stimulus to help them get out of this. All right. Well, hey, we're coming into a great weekend. Couple things I want to mention. Saturday night in Laguna Niguel, I mentioned this last week on my video, but I'm having a community movie night. Got a great movie called Agenda. It's a documentary, covers a lot of the politics of what's going on right now. I will have the filmmaker out, Curtis Bowers. I'm flying him out from Idaho. Should be a great event. Print this flyer up, and I'll have it linked to my email as well. Hope you can make that. Be fun to see out there. I think I already emailed something out to you this week. Next, mark down on your calendar November 13th. It's a Sunday night, Mission Viejo on the lake, Tortilla Flats. I'm going to have one of my happy hours, but it is going to be targeted at sustainable development. What that is all of the environmental issues, the environmental movement that is hitting your city councils, hitting your communities, your municipalities, the state, the federal government, a whole bunch of new things. You've heard of smart growth. You've probably heard sustainable development, the green movement, going green. Well, this will show that. I'm bringing a gal down from up in the Sonoma area who is absolutely an authority, an expert, 30 years as an appraiser for Caltrans under the eminent domain. So she knows all the ins and outs and how the government is doing a lot of this. So mark that down. November 13th, get it on your calendar. I'll be getting a lot more information out to you. It's only 2.5 weeks out. So love to have you there as well. All right, have a great weekend. I'm here for you. Once again, Mike Munzing, Munzing Mortgage Group. You can call me anytime, 949-689-5626. I look forward to working with you. I look forward to working with your buyers. I've got all the great programs out there, and rates are unbelievably low. So let's get them qualified. There's still money out there. We can still get the loans through, and let's do some good business. God bless you. God bless your family. God bless America. I'll talk to you soon. Bye-bye. Money, 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 money.